Hello, everybody, and welcome to Extra Dividends. This is the program where your returns are more than just dividends, sometimes a lot more. And this is your weekend update for April 23, 2022. So, what happened this past week? Well, interest rates are up, more discussion about inflation being up. And the Dow Jones Industrial Average is down 4 weeks in a row, 9 out of the last 11 weeks. The S&P is down 2.8% on the week, and that includes about a 1.5% drop on Friday. So after the hit my portfolio took due to COVID, I was determined to not allow that to happen again. I didn't want to be subject to a huge loss due to another market correction. And so that was the genesis of Extra Dividends. So now it's a fair time to ask the question after all of this negativity is, how did our portfolio fare? So I thought this was a good time to take a look. Hopefully I can get through this in the next 10 minutes. I just want to take a look at every position that we have, go through it with you, and bring you up to date on what some of my thoughts are as we have developed this portfolio. So this is a list of our current open positions, and now I'm just going to jump to a chart of each one of them, and we'll walk through them quickly. And these are in alphabetical order. So starting with Abercrombie and Fitch, this was closed on April 20. So this is one that we closed, one of three that we closed this past week. We closed it for a $40 profit per position. If you had 3 positions, you would have made $120 on this one. That is an amazing 42% annualized return on risk. We got into this position on April 6th, and you can see from that time, it mostly just went up until yesterday where it came down nearly 5%. But we were out before that, and so that is what gave us this great annualized return. Looking next at Camping World Holdings, Camping World is one that we have been in for a long time and have collected numerous profits on the short puts. In January, we sold one and we collected $65. But you can see what happened since January. It has gone down consistently. So on March 21, I sold another 23 strike put that expires on May 20th. That's the one that we're in right now. I sold that for $60. And since March 21, which is here, you can see it has continued to go down. Again, this is the strength of this strategy. We start off with the strike price being substantially lower than what the current price is. So today, even after the downward movement, we still have 10% before our strike price is challenged. And we have until May 20 before that could happen. So 3D Systems, the strike price is $10. You can see it's trading up here at $13.37 after a 6% decline on Friday. Ford is one that we just got into this past week. I think on Thursday we got filled on that one. And we got filled on a $12 strike. That's a lower price than it's been trading. Well, you have to go all the way back here to a year ago since it had traded at that price. So that means that there is still, after a 3.5% drop on Friday, a 20% drop required before it breaches our strike price. Goodyear Tire is a little bit a different story. Last week, we were slightly in the money as we hit expiration. So I rolled it and collected another 60 cents on the credit by rolling to the May 20th expiration. So we received a $50 premium on the first position. Now we have another $60, which brings our break even to $12.90. And you can see that right now it's trading at $13.21. So it's actually trading above our break even right now. And we have an opportunity to take a full profit on that before it expires on May 20th. Las Vegas Sands, another one that closed this past week, closed on the 19th for a $100 profit per position. That's a 31% annualized return. And again, this one you can see it was trading up here when we sold the put, and a day after it came down quite substantially. Fortunately, it's gone back up a little bit, back down, and then back up, and we're out of the position for a profit. Taking a look now at Macy's, the strike price is $20. Currently, it's trading at $24.27. Marvel is one of 2 or 3 positions that is in the money, not by very much, and that just happened. It's a technology stock. Not very excited about technology stocks going forward, but Marvel has been a really good one for us in this strategy. Micron Technologies just got filled in that one. And again, at a really good price. Look, we were filled at $57.50. The stock has to drop 17%, and that's after a 2% drop on Friday and a bigger drop than that even on Thursday. So we're looking good on that one. Norwegian Cruise Lines, strike price of $17.50, trading at $21. So a substantial distance that one would have to come. This is another new one, Overstock.com. We have a strike price of $25. We got a good premium for that, and it's currently trading at $33.69. Speaking of good premiums, wow, Roblex is an interesting one. We had that on the docket for the week before this past week, and a few people got filled, not very many. So we put it back on, we kept it on, and everybody had an opportunity to get filled in this one. Look at it's a $34 stock. We have a $25 strike price, which is nearly 30% from where it's at right now, and that's after a 3-day in a row drop. And look at the premium. We got $85 on that for a $25 stock. So that one should be good. However, it carries a lot of volatility. Sentinel-1, another technology stock, $25 strike price trading at $32.68 after a 2.5% drop on Friday. United Airlines is the only one that went up. We made a profit of $50 on that, an annualized return on risk of 23%. We more than likely will not be able to get back in this one. As you know, we don't trade this strategy when the stocks reach a high, and even though it's not at an all-time high, that's really been climbing, and so we likely won't be able to get back into that one. Just like GTWDC here was in the money a little bit last week, so I rolled this to the 5/20 expiration, received another credit. So we have some more time, and we have a 51.22 break even on there, and it's $49, so it has to go a little bit. So here's Warby Parker, and the strike price is $22.50. Warby Parker is an eyeglass optical company, and really is in the retail sector. And so it has really taken a beating here lately, and is getting close to breaching the strike price. So that's a quick look at where we are in all of our positions. Taking a look now at the closed positions since March. I'm really pretty excited about this strategy. As I told you, it was personal for me, and so I took the knowledge that I had gained over the years in selling options and developed this, and it's working out really well. If you look at since March, we have not had a single loss in any of our positions. We had an $828 profit for in just single positions, and so far in April, no losing positions either. So that's we're at $425 profit for this month. So since we launched this program, we have 161 trades closed, and 149 of those closed profitably. So we have a winning percentage of about 93%. So that is the weekend update for Extra Dividends. Remember, new signals come out every Monday morning after the market opens. If you're watching this for the first time and you're interested in joining us, we do have some space for new subscribers, and you can find us on the web at getstartedtrading.com. Look for the Extra Dividends tab there. If you have questions or comments, I respond to every single one that I receive, and my email address is jim@extradividends.com. Thank you for joining me, and I wish you all to have a great weekend. Have fun and be careful.